Welcome, CA Rutale ma'am. I've seen your profile. So when I gone through your experience, I found that you are capable of giving any lecture in any topics. So you are a complete package for us. In fact, today it is for Fresh Settlement Scheme LLP and Fresh Start Company Scheme. So today we'll go for this, and next again, hope soon we'll call back you again for the next session, ma'am. So I'll brief introduce our today's speaker, CA Ruta Chitale ma'am. She is an FCA and she is having a certification in ICI. She has been FFD. She did FFD, IFRS, Ind AS, and Concon audit course. She has been qualified as a chartered accountant in 2002 with an experience of 18 years. She is currently a partner in Sasank Patki and Associates. She has varied experience including statutory audit of a large cooperative banks, hospital, education institutions, private bank, listed companies. Her firm also specialized in risk-based internal audit and management audit. She has also designed various manuals, report formats of different organizations, including audit manuals, stock audit reports, credit appraisal forms. Additionally, she had addressed various cooperative banks on analysis of books of account, credit appraisal issues in credit cards, stock data verification, HNI investment in banks, etc. She has delivered sessions on following topics at various branches of ICI as well as other organizations. She has also hosted for audit in agriculture, in finance and banks, audit of loans, advances, taxation of trust, taxation of individuals, including HNI. She has also spoken on reporting requirements of urban cooperative bank, on incorporation of a company. She has also spoke in analysis of financial statements from credit perspective, stock audit in banks, how to carry it out an effective concurrent audit. So basically, we can see ma'am have a good exposure in banking. So I think ma'am next session will take care even in banking also. Apart from that, she was also a part formulated by Company Law and Corporate Governance Committee of ICI, which carried out various publications, including Technical Guide on Incorporation of Companies and Technical Guide on Registration of Charge. She has also contributed to guidance note on CARO 2020 and multiple choice questions thereto. She was elected as a managing committee member of Pune branch of WICI during the last term 16 to 19, and she was also a chairperson of Pune branch during the last year, 2019. Her extracurricular activity include reading, tracking, and drama. She is also office bearers of CA Art and Sports Circle. She is also honorary faculty of CS Foundation for Audit Accounts and KED at Ratnagiri. So, ma'am, it's a wonderful thing today for us to listen about this topic. So now I deliver my mic to ma'am for the session, ma'am. Thank you.
Thank you, Naveen. It was Vice Chairman of Surat Branch. It was indeed a very nice and benevolent introduction. I hope I'll live up to it. Ashwin Bawala, thank you so much for coordinating with me. And let me tell the members that it was Pooja who was also, I was associated with her being a woman. And so I'm also very much thankful for her specifically for having introduced me to your branch. I also would like to say that Ishwar Jivani ji, in absentia, I would remember him because we have been interacting some time before. Naveen Jain ji, thank you so much really for such a nice introduction. And without further ado, let me move on to the sharing of screen for our today's session. Today we will be doing two parts. Ashwin ji, please confirm that whether I am audible. Is my voice all right?
Yes, ma'am, you are clearly audible.
Thank you so much. The program would be today, it would move on so somewhat like this, that we would be covering the CFSS and the LLPSS schemes, which were recently, not exactly recently introduced, but just before the lockdown, that is on 31st of March, these schemes were introduced, announced by the MCA, and I think we should look at this scheme. So the reason for this session today. So first part, we will be covering the CFSS and LLPSS 2020. Later on, we will move on to some different significant changes which have taken place in CARO 2020, which of course is not applicable for the audits which are now going to be take place for the year 1920, but it would be definitely applicable for 2021. And I think we must also know about those recent changes since they are very significant, and it would I think while we are doing the audit of 1920, we can also abreast our clients of what are these changes are going to be there, and somewhere we can make them ready for the new changes which are going to come. So this is one of the reasons why we decided to take up the significant changes in Karo. So let me start sharing screen for CFSS 2020. Just a moment. Ashwin, please confirm it is okay. Can you see this?
Yes,
Yes,
yes.
yes, yes, ma'am.
I'm just a bit novice to all the this online sharing, and get a bit confused if at all that's the case. So friends, we are now going to see the idea behind sharing or speaking about CFSs, that is Companies Fresh Start Scheme, and LLP. It is not fresh; it is only Settlement Scheme 2020. The reason is that. Don't think of it from a CS point of view. It is something of a compliance. Yes, I understand, but at the same time we are chartered accountants and we need to look at it from some different angle. My angle to this is, as we are chartered accountants, we must know and we are supposed to know everything that is happening in the financial world. At least this has been my understanding, and I definitely know that people look at us like that. So we must know what are the schemes happening and why. See, I'll give you one example of how this thing can be applied. Say, for example, while we were doing internal audits of some companies, when we told them that please include this particular part in your first quarter audit under the scope, they were very happy. The reason being that they could look at their entire compliance scenario from this point of view, and we helped them make a proper document of what all compliances were pending right from their incorporation. So it really helped them to fresh start, in the sense clean up their earlier activities and have a fresh start. So that is something how you can value add to your own clients, and they will be very happy, believe me, to know that okay, now everything is clear and they are now going to start the new year afresh. So that's one of the ideas where I thought that I should share about the schemes. Coming to the schemes, see, this is a fresh new start. And why that is the case, let us go back a few years so that we will understand the background of this particular scheme. You all know that as far as Company Act and MCA requirements are concerned, there are number of documents that are required to be filed, including the annual returns, financial statements, with the concerned ROCs. Like, there is ROC Goa, ROC Pune. So we have to file so many different statements, and non-adherence to such provisions and non-filing is an offense, exposing non-compliant companies to severe penal consequences, fines, and also prosecutions. So there are a lot of companies in litigation also, because typically that MCA site is down. So many a times I have seen some of my clients taking it up as if हम क्या करते, अभी उनका स्क्रीन बंद था, उनका सर्वर डाउन था, so we could not file in time. How can you say that we are not filing them? So there are a lot of disputes which are happening around, and there were a number of cases also which were filed against this particular appeals. Some problems in forms. So there are a lot of companies which ultimately remained non-compliant. With this in mind, the MCA came out with this particular scheme. This is not the first time, definitely, that such type of scheme the MCA has introduced. Last decade, I think somewhere in 2010, there was a CLSS scheme, that is Company Law Settlement Scheme. And also there was some easy exit scheme. Then again, in those schemes, you had to pay some 25% additional fees. So I think those schemes were not as successful. And then perhaps some 4 years ago, one more scheme had come up, which was called as CLSS 2014. Again, the company MCA thought that they should ask, because of the delayed returns, they asked for 30,000 rupees more for any kind of addition. So with this, it was really very painful for any of the clients to shell out. I agree that there were delays, but it's always painful to shell out some more money for the belated fees. I mean, you have to file related fees, penalties, and all this money. So again, I think it was not very successful, and the reason behind having this clear cut vanilla scheme, that is plain scheme, nothing more, nothing less, you just have to pay up whatever fees are applicable, and file the whatever belated things are there, whatever has escaped filing. That is the reason why this scheme came up. Now coming back to the actual scheme, this circular for CFSS was issued on 30th of March 2020, and the general circular number also I have given. I will be sharing the circular number also for your detailed reading. But what I have done is I have picked up certain points which I felt that I should be sharing. So first of it is, what exactly is this scheme for? See, please understand the background behind this. This is to provide a relief to whom? To all those long time defaulting companies, to enable them to make a fresh start. So this scheme, let's come to the specifics of the circular. The circular says this: it is an alleviative measure. Now, what is the dictionary meaning of the word alleviative? Alleviative means moderating pain or sorrow by making it easier to bear. So, in no way it takes out the sorrow or it deletes the sorrow, but it only makes it easier to bear. So, the scheme uses this word alleviative. Alleviative is making the pain easier to bear. And how? Helps the it helps the person or the company. It is, the measures are this: condoning delay in filings, and second part is granting of immunity. What does this mean? We will go to the next slide soon. Second part of the scheme talks about opportunity to inactive companies. How? By asking them or helping them to become dormant. So it is opportunity to inactive companies and converting them by simple filing of form and to make them dormant. The idea is this, at least what I feel is that instead of, there are two options. One, you can always strike off the company, or second part is make it dormant. I would suggest that it is always better to convert your company into dormant instead of totally striking it off. You all know how much painful it is to form a new company. After that, after number of things, forms, name approvals and everything, after that KYC, DIN, DSC सब होके एक कंपनी बनती है, तो उसके बाद में what is the point in striking it off? I understand there will be situations where the company has turned inactive. Inactive in the sense that maybe the transactions are not happening in that company. Some problems are there. It's all right. I understand that many a times it so happens that it is advisable to strike it off. But I would suggest that if possible, try and explore the possibility of advising your clients to make it dormant instead of inactive. I mean, completely strike off. If you keep it as inactive, then there are penalties also, because you have to keep on filing certain returns. For dormant companies, the number of returns is comparatively quite less and easier also. So this is one of the part of the scheme. Next, we have to understand the timeline. The scheme is in force is from, I'll just go to the next slide because it will give a better idea. So this is the timeline. From 1st April 2020, the last end date is 30th September 2020. Now, who all can do in this particular timeline? It are all desirous, the companies which are desirous, who want to do what? File the belated returns. Now, who all companies can file? Those which are defaulting. Now, this is the definition of defaulting is what? First, it has to be a company because this scheme is applicable to a company. Now, defaulting companies are those companies which have made a default in filing of maybe any document, statement, returns, including annual statutory documents to the MCA registry. I mean, and or if at all there is any such default, these defaulting companies can file all the belated returns, reports, forms without penalty and with only normal fees. That is the beauty of the scheme, that no additional items, no additional payments, belated fees are to be paid. All you have to do is file the belated returns and pay whatever normal fees are there. For example, maybe somewhere the fees for filing are say 300 rupees. Some returns, if at all to be filed or uploaded, balance sheet or this, all the fees are 300. But if at all it is belated, then the fees keep on increasing up to almost up to 200 rupees per day. So you can imagine what all penalties people are facing and what type of measure this scheme or maybe a relief this scheme has given. Take for example another case where directors not disqualified KYC of directors in pending. In that case, the penalty almost is double. So try and find out wherever you are consulting or wherever you are statutory auditors or maybe even internal auditors, that if at all there is a default, try and convince them that this scheme is really very helpful. Second part of the scheme is application for ROC for immunity certificate. Now, what is this immunity certificate? We will just come back to that. But remember that this timeline is very important and immunity certificate is more important, even better, more perhaps, that if you have filed certain forms, but if you have forgotten to file immunity certificate, then there is absolutely no use of coming under this scheme. Why? We will just go to that. First, I have already explained that it is any defaulting company. So any defaulting company means even Section 8 companies also. It's not that only private limited or only LLPs under that particular scheme are there, but it can be any company. If at all even Section 8 company is in default, yes, they can take benefit of this scheme. Now, who all this scheme is not applicable to? It is also important to know that, because if at all your company or wherever, when I say your company, please take it to mind that it is your client or whoever, wherever you are consulting. So all those companies which come under this six. Now, what is this six? We will just go in and quickly through the list and I will explain wherever it is required. See, final notice for striking off has already been initiated. In such case, this particular scheme is not applicable. Application also, if it is made for striking off, then also this scheme is not applicable. So just remember that in case of strike off, whatever if it is related, either application was already stuck off or the final notice has been given, the scheme will not be applicable. If it is already amalgamated, take a case where a company is in default, but now this company is already merged or amalgamated with some other company, so there is no point in tracing out what kind of, because that company is not in existence today on its own. So those kind of companies, this scheme is not applicable. Then application for dormant status before this scheme. So if at all, again, your company is already dormant. Now there is one gray area where people are saying that if at all it is a dormant company and yet some belated returns are there, some returns, some filings, some statements are not filed, what is to be done? I would suggest that it is better to file them off because it doesn't cost really much. And even though the status of the company is dormant, but let me tell you a word of caution. I personally have not come across any such dormant company whose returns have been not filed or something like that. But if at all that is the case, there is no harm in trying. Next part is the vanishing companies. Now, what are vanishing companies? It is a very interesting case to know. This also, would make you understand that there is a concept. At least I got to know that there is a concept called as vanishing companies. And in fact, as I've said here, there are around 112 companies which are listed on the MCA website, which are also called as vanishing companies. Now, what are these vanishing companies? First, the vanishing company's first criteria is that no returns have been filed for 2 years. And this is very important because both the criteria need to be fulfilled if at all the company is to be treated as a vanishing company. Second part is that they are not maintaining the registered office at address with ROC. So ROC, they have say A address, then they are not maintaining the registered office at that address. And third and most importantly, the directors are not traceable. None of the directors are traceable. If these three conditions are fulfilled, then that company is known as a vanishing company. But and if at all it is a listed company, then in that case, that listed companies no returns are also filed with stock exchanges. That is an additional condition which has been put for listed companies. If all these conditions are fulfilled, either listed or non-listed, then that company is called a vanishing company. And the vanishing companies do not have are not applicable for this scheme. So please look out. There are also is a case of a watch list company, but a watch list is completely different type, in the sense they are not treated as vanishing company. Again, this is a gray area, which is where the company has been treated as a watch listed company. There are, of course, your company, whether it is in watch list, whether it is in default, that every data is available with MCA site. You just have to go there and check what all things are in default. But the gray area here, which I was mentioning, was that if at all your company is in watch list, whether it is treated as vanishing. To my mind, that these two cases being different, they would be treated differently. And watch list companies doesn't matter. There are hardly any watch list companies, not much, but so it's also okay to file belated returns for them. Around 112 or 115 companies are listed as vanishing companies. The next part is very simple. If at all the issues or the belated returns or statements uploading has remained for these two cases where the authorized share capital increase is there or any charge related document is there, then again this scheme doesn't become applicable to particularly these two cases. I also remember one question in the previous session I had. They asked me, what about the companies which are under IP, that is CIRP, Corporate Insolvency Resolution Process. Actually, the scheme does not expressly allow or disallow any kind of this type of companies which are under insolvency process. But if at all the insolvency process has been initiated, one can always ask INC 28, I think, and to get the if the directors, of course, are not there, then there is a liquidator. He can always be incorporated inside. I mean, entered into with the help of INC 28, and where he can file the returns in respect of these companies. So even if it is under insolvency and the process is going on, I think it's all right because they have not specifically stated about what is the status of this company. So when they are specifically, there is a negative list of only those companies which are not applicable, then definitely it also means that all other companies this scheme is applicable, because this is a specific negative list of 6 type of cases where the scheme is not applicable. Coming to the next part, it is form for immunity, that is form CFSS 2020. Now, what is this immunity form? If you remember this timeline where we have to make an application for ROC, for immunity certificate. So how to make this application? This application has to be made in this form CFSS 2020. It is also given in the circular and I will be also circulating it to all of you. So don't worry about where to find this form. So this CFSS 2020 form is to be filed electronically. It is an e-form. Now, what is to be mentioned in this form is that for all those documents that are already filed or recorded or approved, you have to make a mention, a list of all these documents and fill it up in this particular form. Now, why I will tell you a bit later. Come to this part, that when it is to be filed within 6 months after the date of closure of scheme. That is today, the scheme is up to 30th of September. So this particular form is to be filed within 6 months, that is till the end of this financial year up to 2021. This particular form is to be filed. There are no separate fees for filing of this form. What you would get on filing of this form is immunity certificate. Okay. Now, why I will explain and then I will go to the effect part. See, the reason is that imagine that you are a company who has say different इस साल का एक form रहेगा, say before that 2-3 years ago some another form is pending. Now the MCA may or the ROC, particular ROC may or may not have the details of all these forms. So what all forms you have filed, it is kind of a ledger extract which you are handing it over to them, that okay, for CFSS, under CFSS, I have filed say 1, 2, 3, 8, 9, 10 forms for this amount, and at this time, it's only a ledger account kind of an extract, and all those forms which are mentioned in the CFSS 2020 form, that only for that only the immunity certificate is issued. So please be extremely careful and systematic in filing this particular form. In fact, if you do not file this form, you do not get any immunity. It is as simple as that. The name itself is called as immunity certificate. So if you do not file the application for getting immunity, how would they give you immunity? So that is the idea, that we have to file this form. Do not forget, if at all you are filing any forms, any returns, any statements under this scheme, do not forget at any point to file this immunity certificate. Even if it is one form that is being delayed and you have filed it under this scheme, please fill up this CFSS 2020 immunity certificate, without which this entire exercise is futile. It will go waste because it is of no use, not to them, not to you. This is what I was saying about the inactive companies. The particular part of the circular talks about how an inactive company, what all options they have. So they say that if at all you want to make the company dormant, file this particular form. If you want to strike it off, file this particular form. So that is the only thing which is given in the scheme. Now this is the list of forms. I will not be detailing all the forms which are covered under this particular list, but this is the website, or rather the site address under which all the forms are there. If at all uh, if at all there are 8 forms even under Companies Act 1956. As you can see, there are 54 forms, and under LLP there are 11 forms. Which all 11 forms are there under LLP, we will go next. And I will also be forwarding you the entire list of forms for which this scheme is applicable. So don't worry about it. All you have to do is cross check whether there are these forms which your company has filed or not filed. If not filed, prepare it and file it. So the list of forms, there is no, this entire list I'll be definitely forwarding. Now what we have to understand is about defaults. There is some question related to this which I'll be coming to. But let us understand that this scheme talks about 2 types of defaults. One part is top non-curable defaults. For example, here as I have written, disqualification of directors or the companies which are already stuck up. This default cannot be cured. It is already done, tried, done, finished. So in that case, there is nothing that this scheme can do or undo things for them. Disqualification of directors, if at all the directors are disqualified, they are disqualified. There is nothing, for whatever reasons the directors disqualification has happened right now. Even if you file up all those returns, file up all those things, the disqualification of directors cannot be removed, because it takes a completely different set of procedures. Now there is a list of what all directors are disqualified. I think the list is of 2016, and it naturally the directors disqualification is up to 5 years. So that list is already there, but this particular default cannot be cured. Now what is a curable default? That is something that, if for example, as again I have said, it is a deactivated DIN for KYC reasons, or for some reasons then DIN is deactivated. You can activate it again by filing whatever forms are there or returns are required, KYC is required, you can reactivate it. So this is called as a curable default. So you have to understand while you are applying the scheme that whether the default is curable or not. This is one of the some of the FAQs which I have picked up from different sites. Now what all I'll be giving is also a list of FAQs is also there in ICAI resources. It talks particularly point wise about the scheme. But here I've picked up certain cases which I feel that it will help your understanding of the scheme more. Now coming to the first part of the question, because that is really important. What is the impact of scheme on appeals? See, somewhere where this is a case of dispute, right? Imagine where a company has already filed some appeals against MCA or against the order of MCA. If the appeal is already filed, what happens? The simple case is that if you want to apply this scheme, withdraw the appeal. That is the first thing. Just withdraw it. That is, if at all you withdraw it, if at all it is against some appeal made for some prosecution, some penalty, and you are asking for some benefit also by filing belated returns for late statements, then first withdraw that appeal, and whatever appeal you have withdrawn, please attach a proof of withdrawal of appeal with this particular thing. Then next part is about last date of appeal was before May 2020. Imagine a situation that you have, I think, 60 days to file appeal, and there were some decrees or the orders were in say month of March or before March, and you had time limit up to say May 2020. Now, what happens for that last day? Simple thing is that as per scheme, they have given 4 months, that is 120 days are given. And actually, the 120 days fall on 30th of September. So you have two ways. One, don't appeal now because the scheme has extended effectively the date of filing the appeal up to 30th of September. So even if you don't appeal now, just pay up whatever or fill up all the scheme, apply the scheme. And if not, you still feel that yes, this needs an appeal, you can always file it by 30th of September. So no worries on the due date. Whatever due dates appeal was to be filed before May 2020, you can always Shanti say 30th September that you can file. Third part of this question is the impact of scheme on orders that are passed by the court or adjudicating authority and no appeal has been made. See, we have to understand that why appeal may not have been made. If at all is that appeal is not carried out or the filing is not carried out due to management disputes, and if the management disputes are prevalent and the matter is pending before the court for that, then this scheme is not applicable. So one has to understand that what exactly is the case and for what reasons the orders have been passed. So please remember that all the cases which are under appeals, which are bound to go for appeals, please have a look at that and then check for the applicability of the scheme. Second part, we have already talked about director's disqualification. Now, this is a specific case where director disqualification is there and also the company is struck off. This is, as I earlier said, this cannot be cured automatically. As far as revival of companies is concerned, if at all the management has gone in for revival or maybe they are expecting some revival order from NCLT or something, we can always ask the ROC to file a back-end entry for authorization for filing of these forms. But if the company, again as I said, if it is already struck off, then this scheme is no longer applicable, but doesn't mean the director's disqualification goes away. That cannot be cured, not at least right now. Third part is whether AGM is not held in time. Is this default allowed in the scheme? See, there are two parts. Whether the AGM is not held in time is first one default. Second part is that they have not filed or filled up the required return on filing of AGM, on conducting of AGM. So the scheme asks you to first cure this thing of default, that hold the AGM. If AGM is not held in time and that's why the filing of form is remaining, how do you correct it? So first you have to hold the AGM. After holding the AGM, then you can file it up. So you have time till 30th of September to cure this particular item, and then you can, after holding of AGM, you can successfully file the form. Now, can there be refund of fees for forms filed earlier with late fees? There are two parts. Again, unfortunately, this particular scheme was announced on 30th of March. Now, there are some people who have, already filed whatever billets, just people like me who were very scared of the mounting penalties and who had asked the client, कि चलो जल्दी से भर लो. So even before lockdown, we had pursued our clients to file and make all things clean. तो उस टाइम जितने भी पेनल्टीज भरे हुए हैं, no refund is possible. So unfortunately, just like in GST, whoever is I'm making this statement with a lot of responsibility, but unfortunately this is the case that you have, if you have not filed it, if you are not filed it earlier, you are okay, now you have the scheme. But whoever has filed beforehand paid all the penalties, unfortunately no refund is available to them. What now? This is the last part of the FAQs. What if Form CFSS 2020 has not been filed? I think we have already discussed this particular part about CFSS 2020, that is immunity certificate. And if it is not filed, then unfortunately you cannot have the immunity for that, and therefore it is required that you file a CFSS 2020. Okay. Now coming to LLPSS 2020. LLPSS 2020 is particularly for LLPs. Now LLP is, that is because it is formed under different act, and LLPSS 2020, the funny part is there were two circulars. First it was notified, as I have written here, on 4th of March, and later it was modified on 30th of March. So now there are two circulars and we have to read both the circulars in conjunction with each other. So, but what exactly is the timeline more or less remains the same. Here there is no talk about immunity certificate. As far as LLPSS 2020 is concerned, all you have to do is the defaulting LLPs, similar definition, whoever is formed under LLP Act 1 and who has defaulted in filing of different forms. So if both these conditions are there and you are a defaulting LLP, you can file up all the belated returns reports forms without penalty and with only normal fees. So what all forms are again there under LLP? There are some 11 forms. I have made a list of it next, which also I'll be circulating, but here also in this presentation there is a list of 11 forms which can be filed if at all they are belated. The funny part, or rather an intriguing part you can say about this entire scheme of LLPSS 2020 is that they say this: forms that are due to be filed till 31st of August 2020, that can be filed before 30th of September. Now, why they have said that, I have tried a lot to find out that what exactly is the idea behind having this particular statement that forms that are due to be filed till 31st August 2020 can be filed till 30th of September. So that means the forms which the due date falls after 31st of August, but before 30th of September, perhaps there are no such forms because I tried and found it out, but there were no such forms whose due date, if the due date itself is 30th of September, then this really doesn't make any sense. So might as well, for our sake, we can say that all those forms which are belated, file it. So till 31st of August, I'll just give an example which I have said here, that due date of say form 11 is that we have to file it within 60 days of closure of the financial year. So therefore the due date of filing form 11 is 30th of May. Now if at all this form has remained to be filed by 30th of May, and since it is due before 31st of August, we can always file this form by 30th of September. I hope the point is clear. So, and if not, see, the penalties are pretty high. They are around 100 rupees per day or so. So therefore, this scheme comes in very handy. Of course, there are no additional fees even for LLPSS scheme, and it is all again strike off. That idea remains the same. If at all LLPs who have filed Form 24 and applied for or already struck off, then the scheme doesn't become applicable. This is the list of forms which is there for LLPSS 2020, and where all what all can be filed. Again, don't worry about checking or looking at the forms. I'll be definitely sharing it. So whatever changes have remained to be uploaded, whatever earlier in the first part of the scheme, only 4 forms were allowed, but the next circular or the revised circular which came on 30th of September, 30th of March, it allowed for remaining forms also. Now coming to the last part of this particular schemes, what happens if we have not availed CFSS 2020 or we have not availed LLPSS 2020? What exactly happens? See, इनका कहना है ऐसे है, अभी whatever things were remained to be pending, they have given you enough time, they have given you enough, boost by not charging any additional fees, any late fees, nothing. So the idea is that they want we all of us are chartered accountants to advise our clients and the company secretaries to help their clients in filing whatever is late not filed, because see they also do not understand that if at all some forms are remaining to be filed, the legacy or the link part is gone. So they are also very much interested that all the company records should be proper, should be correct, so that they also can analyze, they can also do what all they really want to do with all this data. So now their idea is, if at all one is not going to file this particular and make use of CFSS 2020 and LLPSS 2020, then they are going to have it in the sense it is being written also in a lot of newspapers. Maybe it is what they are also trying to say, and what ROC here, at least on my interaction, they said that this is an ultimate scheme without additional fees, and if still the companies are not going to make use or take benefit of this particular scheme, then what else? Then they will definitely go in for prosecution, they will definitely go in for penalties. If still, even after giving so much time and not levying of additional fees, if some people still remain non-compliant, then what can be done more? So to conclude, the significant relief is what happens, what is there in their mind is that because of this relief, there will be reduction in the number of cases pending, prosecutions, appeals, whatever all are there in NCIT and NCLAT, especially compounding cases and non-compliance, non-filing of document cases. This will definitely help them in declogging of the tribunals and other such courts, so that more serious matters can then be taken up by the ROC. You can imagine what all they are moving towards to this is kind of a warning also for us, really speaking. Please don't take it otherwise, but this is something to clear up even our audit reports, our documentation, because somewhere 2 years ago there were some companies in Pune where ROC had issued a notice that you have not made this statement in your audit report, why you have not made, let us know. So something they would definitely then putting all their energies into the audit report part, and that's why instead of they would then have the entire statements at their disposal and they would be able to properly analyze. So this also means that our responsibility and clarity in audit report is very very going to be crucial. So that is another reason why the Surat branch office bearers have requested me to also share with you about Caro 2020, because this scheme and Caro is somewhere linked in the sense in the minds of ROC. Once this scheme is completed and many of the defaulting companies there, they also will have enough time in their hands to now concentrate on your audit report. So let's now go to the audit report part. This is as far as schemes are concerned. These are the various websites which I had looked into while I was carrying out the presentation. I have also listed it out not only to give them credit, but one of the reasons why I have listed it out is that you, if at all it interests you, or if at all you want to know more about this scheme, please refer to this website also. So this would help you in going through the FAQs, or maybe looking at the documentation issues, or there are some cases where certain forms still cannot be uploaded. But this particular MCA also has number of FAQs. ICI ORG also has number of FAQs which you can always go and read, because they are in a very very simple text. The reason for listing out. Now, I'll come to the last part of this particular presentation, and you might wonder why I have put this departmental store picture. And the please read below what I've read said. It is called nudge theory. Nudge in the sense you some of you might be aware that departmental store always displays all its goods not in some inordinate way but with a particular place in mind. So the eye level there are things which they want to be moved fast or they want certain items to be sold fast. Maybe the commission is higher, that's one of the things. But what is the nudge theory? It gives certain impetus, certain push to things. Now one of the reasons why I put this nudge theory here, the only not one of the reasons, the only reason perhaps is that see we are somewhere entering into a multidisciplinary forms. In that case, even our area of practice is going to be different, or maybe some different things we need to do, some non-traditional things we need to do. Such type of schemes, even though particularly a domain of company secretarial practice, I feel even as chartered accountants, just as I said at the beginning of the session, that we must do some nudge to our traditional practice, something different, try so that our participation, our involvement with the client increases, and this gives definitely a value addition to the client. So this was the entire idea about why we should know about the scheme and also how to implement it. So thank you very much. As far as LLPSS and CFSS schemes are concerned, Ashwin, is it okay if I take a 2 minutes break? I'll just start sharing with the part on the Caro process. Till that, if at all anyone has any questions, please type it out. And what I'll be doing is I'll be answering it. If at all it is possible for me to answer you right away, I would take up those questions and answer right away. If at all are required to do some reading, please definitely give me some time. Don't worry, I'll be getting back to you on those questions.
Okay, ma'am.
We can start with Caro.
Yes, ma'am.
So coming to Caro 2020 and highlights of Caro 2020. First of all, let me say this, that ICAI has come up with some excellent resources as far as Caro is concerned. There is a guidance note. I am not saying just because I was a contributor to the guidance note, but only because it is really very informative as far as MCQs are concerned. I definitely remember, I think they have already come up or they might be coming up very soon with MCQs, multiple choice questions on Caro 2020. And believe me, not only for students, it is also helpful for the members if you go through this MCQs, because it will help you in clearly having the idea about what exactly the Caro 2020 demands from us as auditors. Okay, next point. If you can see this, why I have said God is in the details. See, this is one of the most famous sayings. These are the features of Caro, which are to my mind about the new Caro. Now, what exactly it is? What do you mean by God is in the details? See, it popularly, this is a very popular saying, but I think that new Caro 2020, well, before that, let me say that the applicability was to be from 1920, but with COVID pandemic and everything, I hope you all are fine and taking enough care. But also the government, I feel, is very much thoughtful, and they have postponed the application of Caro 2020 to the financial year 2021. But we are in the midst of the financial year 2021, and I think this is an opportune time, because while we are finalizing the financial year 1920, and we are also carrying out some, say maybe DPT3 or such other provisions related to Companies Act, this is the right time to know that what is expected from us on for the year 2021. So coming back to this features about God is in the details, it means what? This Caro 2020 as compared to the previous Caro 2016 is extremely detailed, and it is also puts more onus on the auditors to specifically answer certain questions, and that too in detail. Earlier, I'll give you some examples. Say, for example, title deeds. Earlier in 2016, it only used to say that if at all the title deeds are not in the name of the company, please provide details. Now, what do you mean by please provide details? It was left to the discretion of the auditor to provide whatever details he or she feels like sharing. But now Caro 2020 is detailed in the sense that it specifically asks which details the company wants, I mean the MCA would want to know from you as an auditor about that particular title deed. So it also, and just remember that now the clause says whatever is disclosed in the financial statement. So there is one more additional word called as disclosed title deeds for those assets which are disclosed in the financial statements, and they have to be provide, you have to provide the details in the format that has been clearly specified. So God is in the has you have, it has to be very very detailed. Each and every clause, if you go through that, what details are to be shared is very clearly given. Coming to the second part of the feature is essence. Please look at the definition of what is essence. We will go through it because it's a bit complicated. The intrinsic nature or indispensable quality of something, especially something abstract, which determines its character, without which a property wouldn't exist or be what it is. The whole point or the whole essence of making this point is, please try and understand what exactly is the question being asked for. Caro 2020 is not some simple, answer the following. It is not like that. We have to understand. I know there must be definitely many senior members in the audience here, and please, I'm only trying to share, my thoughts or my take on this particular aspect. So please bear with me here if I sound a bit, odd. So coming to the essence part, what exactly is called as essence of any provision? We have to read the question very, very carefully. For example, again, say imagine a situation where a advance to director is pending. Okay, he has given, and if you look at the 31st March, say bank reconciliation statement or the financial statement, the advance is not there because the director has paid the company a check for the equivalent amount. And if you look at the financial statement, the check is in the bank reconciliation statement. Now the check is dated, say somewhere, for example, 15th or 18th of January. So as far as 31st March is concerned, that check is not a stale check. Is it a stale check? No, it's not. Because that stale check would happen only later on. So as on 31st March, whether we need to report this under section 185 or we are okay with it, what is to be done? See, this is where the essence of the provision comes, that whether as auditors we should be reporting that there is an advance outstanding to the director which is not allowed under section 185, or because the advance or check has been given by the director, it is in the bank reconciliation statement, that check received but not yet cleared, and therefore you would skip not mentioning. what is it exactly, what the essence of the question is. This is what thinking should be there for each and every question of the Karo. Believe me, nowadays, not only the disciplinary committee, but NCLT and each and every, that kind of thing, parameters are being looked into, that what exactly the auditors are doing. Believe me, the responsibility on our shoulders is tremendous, and we just cannot escape by saying that okay, so let's continue with this example and say that as far as 185 is concerned, there is no advance that is outstanding. We cannot say that. So if I was the auditor in this particular situation, what I would have done, I would have checked on the audit date. That is, the audit date is naturally somewhere maybe May if it is listed company. So in May, I would have checked what happened to that check. If at all the check is not cleared after 31st, there is time for 3 months. But if the check is not cleared even by the audit time, I would make a clear cut, no, not I will say this and disclose this fact that this was the case, and that's why this particular case, I mean, this disclosure is being given, that a director was advanced money, he has given a check, but as on the date of the audit, the check was not found clear and the advance remains as it is. You can also think about applicability of AS events happening after the balance sheet date to really check whether Section 185 is applicable to that particular situation or not. More than less, I think the essence asks whether there was an advance. I would say yes, there was an advance and say this. So please go into and behind the question what exactly is being asked rather than what actually is happening in front of you. So this is what I wanted to say about the features. Now coming back to the significant changes that have happened in Karo, we would be going say maybe clause by clause, and where there are changes, I have highlighted what all changes are there in Karo 2020 as compared to Karo 2016. I have not gone before that, but I have only restricted my presentation to the comparison between these two clauses. Now, what we will be doing is we will go through each clause. I will try and explain my views or the points which are to be looked at while you are filing a CARO 2020 in the next year, or maybe if you are doing interim audit, please go and focus on these particular items and ask the client to be more vigilant of this fact, because it is not only us who needs to be vigilant, it is them and especially their CFOs or the person in place in governance. They need to be extremely careful as to what all how they are going to manage the entire financial statements. So coming here, see, I have listed out certain changes. This is not exactly a replica of the clause, but what I have tried is to pick up what is the exact change between 2016 and 2020. We will go through this particular clauses, and simultaneously I will explain what I want to say about it. Coming to the first change in the fixed asset scenario, see, essentially most of the clauses are retained as far as clause 1 of fixed asset is concerned. It in fact asks for some additional information. Now, what is this additional information? It talks about, for the first time maybe, about PPE and intangible assets instead of only fixed assets. PPE, I'm sure after the recent change in accounting standards, you all must be classifying your fixed assets into these two parts. Earlier, it was only fixed assets, and but now it is property, plant, and equipment and intangible assets. Perhaps to my mind, the reason is that they are specifically asking about intangible assets. And if you look at the real clause, actual clause, it talks about whether proper records for intangible asset has been maintained. To my mind, it means that we as auditors also need to be very particular about documentation when we are accepting certain assets as intangible assets. We need, maybe we can complete our documentation by accepting or some management representation, but management representation cannot be the only alternative for documentation. Please go and look into the exact records by virtue of which the company has recognized that asset as an intangible asset. It can be trademark, it can be patents, it can be copyrights, it can be goodwill if at all it is purchased. So it's such, if at all, say again, let's go back to trademarks and copyrights. Don't just recognize it as allow them to recognize it as intangible assets because they are saying so. Please go and make sure that they have indeed filed for trademarks or patents registration, if at all, because the question asks specifically that whether proper records have been maintained, how the intangible amount of intangible assets has been valued, especially in cases where Ind AS is there. We need to understand how the valuation, whether it is a fair value or whether there are changes in fair value whenever the intangible assets are being recognized in the final books of account. Coming to the separate reporting, or I think the only reason for this separate reporting is to bifurcate between these two questions. PPE of course talks about property, plant and equipment. Then another question what I want to say is that I think for the first time they have defined materiality, because details are asked extensively, and basically if at all the material, and for material transactions, what are material transactions? They have defined it as 10% of the entire total. And then coming to the next part, no reporting on title deeds where company is lessee and lease agreement is executed in the favor of company. So basically all the assets under lease are excluded. No need to worry about it. All you have to do is think about the AS for operating leases or financial leases, if at all there are any financial leases. Coming to third part, the specific details are required to be given in case title deeds are not in the name of the company. This essentially is the clause which is retained from the earlier 2016. But what specific details are to be given is specified in Caro 2020. Next two parts is something different and completely rather different from 2016. It talks about revaluation of assets. If at all the assets, that is PPE, has been revalued, the details of the revaluation are to be given. And whether they are revalued, how revalued, I think again, if you look at the essence of this particular item, it is that we need to check about the valuation, whether it is more, high, adequate, not adequate, what exactly it is. So just do not report about, okay, revalue assets have been revalued. You have put up the revaluation amount, you have put up revaluation reserve, you are done for depreciation, everything. But do not, for your own sake, please look into how the revaluation is carried out, whether there is any underlying document for stating the value at the revalued figures. Please keep that particular document, at least a screenshot of that particular document on your records, because if at all someone questions you about, because we cannot say about the adequacy of the revaluation or whether it is all right, how much it is, we cannot talk about valuation unless you are of course an RVO, but that doesn't matter here when you are doing a statutory audit. So might as well have a copy of the revalued assets and on the basis of which the evaluation has taken place on your records also. Last part is also a new one in the fixed assets. It talks about proceedings initiated or pending against the company under Benami Transactions Prohibition Act for holding Benami property. This is a, I would say really an auditor is made a detective here, and I think Caro 2020 is all making ourselves as a detective only, because we have to look at so many external evidences, so many external communications that we are bound, to give more time to looking at such type of transactions, if at all they are there. I wonder how we will be able to know that any such action or proceeding is being initiated against the company where we are auditing. It would be, to my mind, very difficult to carry out or take out such transactions, and then if at all the company is clear enough, and they are willing to, give us any kind of communication proceedings which are being made against them, our job would be easier. This would also mean that you will have to change the MR, that is management representation letter, which you are going to get from the company, and include this point also in that MRL. So these are the basic clauses as far as fixed assets are concerned, which you would have to, basic clauses of course remain the same as far as verification and all that is concerned. If at all there are any problems in verification or any discrepancies observed in verification, you would have to report it. There is no, I mean, it's not that we are only looking at the changed clauses, and because the topic demands that I have to talk about significant changes in Caro 2020. So coming to the second part, clause 2 about inventory. It is reporting on inventory. This is again earlier, if you remember about Caro 2016, it talked about whether the inventories were physically verified during the year, and we had to talk about the reasonableness about it, and also if at all there were any discrepancies, how they were sorted, and whether the effect was given in the books of account. For the first time, I suppose, now they want to know about these two underlying parts. One is coverage and procedure of physical verification. See, I remember 90% of the reports, including myself, I'm not no, not something new. I always used to write this in my Caro, that at reasonable intervals or at every 6 months, the management thinks it prudent, or as per the management, the inventory verification was carried out at 6 months interval, and in the first interval they used to cover only certain of these inventories, and the next part is much, and how it is reasonable and all that. But now what they want to know is about how the coverage is there, what is the procedure, whether the procedure followed for physical verification is appropriate or not. Now how do you really define the word appropriate? I think someone has raised a hand, but I would suggest that I will not be able to read your queries right now. So please tell them to me after the presentation is over. Please excuse me for that. And coming back to inventory, coverage and procedure. See, this is a very dicey question as far as I am concerned. I was very much scared when I read this particular, change in Caro. It talks about coverage of physical verification. So I think the government or MCA wants us to understand that how the management has carried out the physical verification, and more problematic is the case where it wants us to tell whether it is appropriate or not. See, that would mean that we also must know about the process of how that entire, if at all it is a manufacturing unit, trading unit, we need to know how the process is there. Anyway, in statutory auditors, we definitely go through the process flow and then try and understand the bottlenecks, whereby even more, test check can be made possible to understand what are the material significant changes in their particular process. But here we need to, will be a very challenging case for documentation and working papers. If at all we need to prove sometime down the line that we had thought and why we had thought that the coverage is also appropriate and the procedure followed for physical verification is also okay. That particular two things will definitely need a proper documentation and working papers. Coming to the next part, see here also it talks about uh, materiality concept. Discrepancies to be reported for each class of inventory only if it is 10% or more. So if it is an insignificant immaterial items, then we need not worry about the discrepancies, but we absolutely need to worry if it is more than 10%. Now come to the underlying part. What do you mean by each class of inventory? It is not defined in Caro, but it is defined if you look at AS2. It talks about it. There is only one line I remember. I think somewhere in the disclosure clause, it is stated what do they mean by class of inventories. See, there are two views. One is the ABC analysis, but ABC analysis really doesn't make sense when we are going in for statutory audit, because here we are talking about the disclosures in the books of account. So if you look at AS2, it talks about, I'll just read it for you from the AS2. It talks whether raw materials, classification of inventories is raw, most commonly used is raw materials and components, WIP, finished goods, stores and spares, and loose tools. So it talks about that. So this is the different classes of, just a moment. It also talks about these different classes of inventories. And if at all there is any discrepancy in that report in respect of any particular class of inventory, we have to report in our audit report. Third part is quarterly statements filed with banks or financial institutions are in agreement with the books of account. See, look at this particular item. This particular C part is applicable to who all? Those companies which have sanctioned working capital limits of more than 5 crores of rupees, from whom banks and financial institutions taken together. So it is not only one, but the aggregate working capital limits, and that too sanctioned. It is not talking about usage. The report talks about the sanctioned limits. If those sanctioned working capital limits are more than 5 crores, and the second part, they are secured against current assets. That is where we are looking. Inventory is a major part of current assets. So if they are secured against current assets, and if these two things are there, we need to check what? That the quarterly statements, typically you must know that, you will all be knowing in fact, that we need to file the stock data statements, or monthly also in many cases, but quarterly, because more or less the banks ask the statutory auditors or some auditors to certify this quarterly statement. So they are of the mind that if at all you are also certifying the quarterly statements for your clients, then please verify that whether they are agreement with the books of account. You might wonder that how quarterly statements and books of accounts can be compared, but don't think for a moment that tally and all that you need to keep on your records. If at all your client is having a sanctioned working capital limit of more than 5 crores and is secured against current assets, then in your working papers make sure that you also have the quarterly statements for your own record, because anyway if you are certifying it, you would have it in your certificate holder. And also, what is filed to the bank, take a acknowledged copy of the records filed with the bank for your own records, because see, I don't believe any of, even our clients are very close, very good friends of mine, but please, as far as working papers are concerned, take a acknowledged copy of the bank for your records and keep it with you. If at all, also take a copy of stock statement, data statement, or maybe a trial balance for the quarter end, and keep all these three documents on your records, because quarterly statements, what if at all the first quarter has already finished, but when you're going for the second quarter, and if at all this is the situation, please keep it with you, because anyway we will be requiring it when we will be finalizing the audit report for 2021. This is as far as inventories is concerned. And coming to the third part, let's go to the next part. It is loans. This is a very dicey, clause as far as I am concerned. I thought that this is a lot of question marks are there as far as this particular item is concerned. Loans, investments, guarantees, securities, and advances in the nature of the loan. See, earlier the item was very not so difficult to understand, but here they are also talking about advances in the nature of loan. Now it talks about loans given to any party. Okay. Second, earlier, if you remember, it particularly asked about all those loans and advances or guarantees and securities given to those persons who are mentioned under the registered maintained under section 189. But and it also talk, I think, about secured or unsecured loan. Now the scope of this entire clause has increased. It not only talks about scope a secured or unsecured loan, but it talks of all these items. So we have to report about loans given to any party, let it be any person. If at all the company has advanced or in the nature of loan, please report it. Second part is very, very important. It talks about adequacy of terms and conditions regarding the investments made. Securities agency understand that say a company A is making some investment in its group concern, say B, or maybe its sister concern, maybe its subsidiary, maybe in a joint venture, as we look at India's point of view. If at all such type of investments or guarantees or these all things are being given, they are asking us as auditors to look into the adequacy of terms and conditions, which clearly means they are asking us to look at the propriety of things. Please understand the word propriety. When this thing say adequacy, it means they are also asking us to look at whether it is okay. If you were in the company's place, whether you would have thought it correct. So they are now going beyond the books. They are now going beyond your normal whatever is in front of you, but they are asking you to look at the propriety angle. Remember the point on the essence. See, this is where the essence part comes into. Now, the only problematic portion here is how would you document that you have thought that the terms and conditions are adequate or okay? Okay. I hope I am able to get across to you that it is now CARO 2020 also poses a lot of questions on the working capital management from our point of view. So you need to think about how we are going down the line 2 years, 3 years later. If someone questions us that why did you think that this was okay? Didn't you think of this? That this term should not have been there, or 3 years. Repayment should not be for more than 5 years or 3 years. There will be so many questions. So we need to really sit down and think about what all working papers we are going to collect to prove that these terms and conditions are adequate or were adequate enough. Coming to the third next part, these are the additional reportings which we have to make provided this particular situation is there. See, it says that if certain loans amounts or advances are given to group entities, okay, group entities, sister concern, directors are common. Definition of group is quite clear, I think, in everybody's mind. And think about from a related party point of view. So if at all any such hand loans, whatever guarantees, loans, securities are given to such group concerns, we also have to make a reporting in respect of terms of amounts of loans and also the nature. So it cannot happen. See, somewhere they are trying to go to the point of beneficiary. Yes, do you remember now that there is a case of special beneficiary or specific beneficiary? In that case, who is the beneficiary behind certain transaction? This is one of the pointers where they would also understand that to whom the loans are given, how the money is utilized, how the funds of say a company is utilized, where they are moving, if at all it is being diverted, for what the loans are taken, from where it is utilized. So it is somewhere going to the SOB, specified beneficiary. And just check this particular clause. It also talks about securities or advances or loans given to others. Others means anyone. So basically, if you look at the part A, it talks of reporting of loans given to any party. Here also it says that so any incident of loan, from this what we understand, any incident of loan or advance given. So whether advance given to a supplier will fall under it, to my mind, no, of course not, because it does not. But see, somewhere it also says advance to others. Better to get it disclosed and in the notes of account say specifically that this advance is for this purpose. And anyway, if it is not squared off within the year, it falls under the definition of deposits, if you remember that. Next part is additional reporting also. This is an additional reporting, which means what? If at all this particular situation is there, you need to report it. So it is for any loan or advance in the nature of loans, renewed or extended or fresh loans granted to settle the overdues of existing loans, which means हिंदी में उसको मराठी मध्ये आम्ही त्याला नवं जुनं म्हणतो. नवं जुनं मीन्स पुराना और नया वो सेटल करने के लिए लिया रखा है. So this particular clause tells us auditors to check into the purpose of such loans. If at all such loans or advances are taken to renew, extend, or settle the old loans, or make fresh loans to settle the old loans, or overdues also. It not only talks of the entire principal part, but also if at all part of the loan is used to settle the overdues, then we need to report. You can imagine the amount of responsibility that is put on the auditors by way of this clause. We will really need to work out the funds flow. If I think cash flow is one part, but funds flow here is also important, and we will need to put our entire analytical mind to check that where all this amount has gone and for what purposes. And if at all this is the case, please report it. Last part of it is reporting for such loans, either repayable or demand, or without specifying any terms or period of repayment, which means what? You have to report the loans which are repayable on demand. Okay, जब like gold or maybe demand loans. There are so many types of demand loans. If at all the terms of the loan specify that it can be repaid on demand, or if there are at all no terms given, there is no period of repayment given, then these loans are also to be reported. Point being, we need to tell our client that please, whatever advances, loans, guarantees, securities they are extending to not only their sister concern but to any other person, please make a small letter or a small MOU or some document which witnesses the terms. If at all that term is there that I'm advancing you this money, but if the performance is not there in say some 2 months, 3 months, 8 months, whatever the terms, this loan will be repaid, the interest will be charged, or all those things which you feel are correct, please advise your client to maintain such kind of document on your record, and which will help in making the entire financial transaction in more systematic manner. These are the major changes in deposits. See, deposits, there are not many changes, but what we need to look at, this is the sentence which has been added. This particular sentence which I have under commas, that is the sentence which is exactly from the clause. It talks about deposits accepted by the company or amounts which are deemed to be deposits. Now, what are deemed to be deposits? If you carefully read Acceptance of Deposit Rules 2014, you would of course know what is a deemed deposit. You perhaps might have read it while filing of DPT3, where we also need to certify what that particular statement. So please go through the Acceptance of Deposit Rules 2014, where even deemed deposits, if at all they are there, we need to make a report. It is just a disclosure requirement, nothing wrong, nothing correct, but I feel that this might be a clause to cross verify that DPT form. Coming to clause 7, statutory dues. It is not very difficult even in this clause. There are only two specific changes. One is just to include GST, because earlier there was sales tax and all those acts. So here they have made a change to include goods and services tax. So statutory dues includes, of course, just like we all know, indirect tax is included in statutory dues. They have just specified that particular name in CARU. Coming to the second part, earlier they had specified that if at all there is any dispute with income tax, sales tax, particular authorities, then that disputes is to be reported. But now Caro 2020 says that it is reporting of dispute in case of all types of statutory dues. All types, whatever statutory dues are pending, if at all they are disputed, then we have to report it under this particular clause. Earlier, there were only income tax and sales tax, as I remember, maybe excise. But now we also have to report on PF, ESR, or such other dues if at all they are there, or any, say, customs or some other items, cess, or other whatever statutory dues are there, we have to report it under this particular clause. All disputes. It is not only particular types of dispute. Please remember this, because many a times when management gives us details or data regarding disputes, they forget to include this. Maybe even some kind of penalties or some disputes if they are raised, not exactly octroi but RTO authorities, or those type of authorities also, and if at all they are statutory, we also need to include it here now. Now coming to the next clause, it is called as on recorded income. On recorded income, it is a completely new clause which is not there even earlier, or not exactly this clause. It talks about, or rather it is a comparison between what all assessment has been carried out by the income tax authorities and what has been reported, or rather books of accounts, what all it says. I remember a case where, please excuse me for the word, but there were some kind of coca transactions, what they used to say, that there was some winnings or some items of income which were not reported in the statutory books of accounts or the final books of accounts, but later on when income tax opened up some items or some assessment, they came to know that certain income or certain money has passed hands from, say, part A to company B. In those cases, if at all on assessment of that company that particular income was considered as undisclosed income, then here it is to be treated as unrecorded income. And see, here it says that which requires auditors to report whether previously non-recorded income has been recorded properly based on the outcome of assessment under Income Tax Act. In the into bracket, this is some area which I thought is an odd question, because it only talks about income part. It doesn't seem in typically in assessment cases they also disallow certain expenses which is added to their income, but it is not, this clause is not talking about expenses disallowed. If we really look at the clause, it only talks about income that is not recorded. So I think that we can definitely take only that much view and restrict ourselves to that income tax clauses of 69 and all, where it is an undisclosed income and later on it has been added to the income of the assessee, and that income will now have to be, whether that is the case and whether it is a non-recorded income, we will have to disclose it here. Why? It will also give an idea to the reader of the accounts as to how much income is not recorded in this particular final books of accounts, when while the reader of the accounts would definitely get an idea from this particular clause as to exactly how much is the income outside this proper books, final books of account. Next, this is perhaps one of the most changed clauses. This particular item, repayment and usage of borrowings, it is a clause which is added, deducted. Lot many things are put in this clause. One of perhaps the most changed clause. This will take a bit of time for us to explain. So let us go through it one by one. Just please excuse me for a moment. Clause 9 talks about repayment and usage of borrowings. What exactly is this? It is very, very significant clause, and a lot of things would happen if at all this is not reported. First, these are all the additional things. If you actually look at the clause, the basic questions has remained the same, but these are the additional questions. It talks also now of default of interest payment. Earlier, interest defaults were not covered, but as a prudent measure, we always used to give this particular, disclosure. But now this clause specifically asks for default of interest payment. If at all there is a default in payment of interest, that has to be reported. Second part talks about application of term loan. Okay, purpose. What was the purpose for which the loan is sanctioned? And the most important and specific question is whether it is diverted. I think this is a extremely dangerous clause. Why? I'll come to that. See, first part is easier to understand. We can take the sanction letter of the bank and check for ourselves that what was the purpose for which the loan was sanctioned. Okay, for part A, we will know. Second part, come to the application of term loan. So where this particular amount is actually being applied, whether it is as per the sanction letter or it is somewhere different. Okay, I'll give you an example of this particular part and how the reporting is to be made. But the third question which is asked is whether it is diverted. Here, before 2020, in 2016, Caro, if you look, they are only asking that whether the term loan for which it was sanctioned, whether the same has been applied for that purpose. They are not asking us to make a qualified statement about whether it is diverted. If you are saying it is diverted, yes, it is diverted. If it is not, then it is not diverted. So here the onus of making a responsible statement is on the auditor. If you remain silent on this question, it is treated that it is not diverted. And tomorrow, you know that so many cases are coming up in NCLT. Then there is again insolvency resolutions. All those cases, if at all it is proved that the loan was diverted, then imagine the soup which we all will land in. So this question is extremely important. Each and every question of Paro is of course important, but I feel that these are the questions which I am again and again highlighting are those questions where you need to keep the working papers properly intact and in correct order and sequence. Please remember to take a copy of the sanction letter for all those term loans which were sanctioned. Here it talks only of term loan. It talks about working capital limits somewhere else. So currently this particular clause talks of term loan, so remember to take the term loan on record, check how the application of that term loan was made. For example, I'll give you an example. In one of the cases when this clause was recently introduced, at that time that particular company had taken the disbursement before 31st of March. Okay, but there was no time to apply that particular term loan when it will make an application. The application means use that particular money. On 30th March or some 31st of March, it got the disbursement. Once it got the disbursement, now where to keep? So they parked that entire funds in their cash credit account. Now whether it is an application of term loan. See, this is a question, these type of questions is somewhere where our entire thought process should, gets all problematic. Now, is it an application of term loan? It's not, because the sanction letter categorically says that the purpose is to say purchase a machine. Now, as on 31st of March, if at all it is disbursed, it is but obvious where that person will park, where it will put the funds. Imagine a situation where the bank is insisting that you take a disbursement because you all know that they also want to meet their targets. So they keep on insisting, take the disbursement, take the disbursement. Now client also says, okay, bhaiya, de do. So but he cannot possibly purchase a machine on that day itself. So the purpose is not served. So the bank also sometimes advise, okay, put it in your cash credit account, at least some interest is saved, somewhere. It is parked there, right? So, but as an auditor, what is then our responsibility? Our responsibility is to state this particular fact clearly in the audit report. This is where I am again and again talking of the essence. Whether it is applied for the purpose for it was sanctioned, no. Whether it has been disbursed, yes. So then state it clearly that the loan was disbursed at the far end of the year, and as such, the management thought it prudent to park it in the cash credit account. So this is the disclosure that you have made under the application of term loan. Tomorrow, if someone questions you that why you haven't said that what has happened, so you don't have to justify yourself saying that ab kaisa wo machine leta. No justification. Whatever you want to say it in the audit report and very clearly. This particular, it's a question asked to you, right? The answer is in your hands. It is not necessary that all the times you have to make a qualification. That is what at least my senior partner tells me. There is no reason why you have to keep on, saying ye hai ya wo hai. Not that. Sometimes you have to make a disclosure that this is the fact. Now, into my mind, because this is the case, this doesn't look as applied for the purpose for which it was sanctioned. But whether it is diverted, if at all this question arises in the next year, whether it was diverted, the answer is obviously no. It is not diverted, right? It is not put to use. It is whether diverted or not is a question which is mute at that particular, in this particular example. So I will just disclose this fact and say that this is the case. I will not make a statement about the diversion. So please apply your mind as far as application of term loan is concerned. Be very, very careful, because remember that somewhere they want to put the blame on auditors that आपने ये देखा नहीं है, तो मैंने देखा, जो भी देखा वो मैंने रिपोर्ट में लिखा है. That should be your stand. Coming to the third point, coverage of reporting is expanded to include all types of lenders. So this particular reporting is not only for lending or borrowings made from banks or financial institutions, but the reporting is also for other types of lenders, in the sense that if at all there are intercorporate borrowings, it also is a part and parcel of borrowings. So you also need to check whether these particular items, say for example, if at all there is an interest default, if it is not interest bearing, forget it. But if at all, what the point I want to make here is that this particular clause is not only for the borrowings made from financial institutions or banks, but all sorts of lender, whatever liability is on the all the borrowings that are on your liability side, for all those types of lenders this particular clause is applicable. The D part of the question is again very difficult and a new point to that, whether the company is declared as willful defaulter by any lender. Imagine how you are going to find out that this particular company is a willful defaulter. Part one is possible that you are asking for loan statements, to checking the loan statement, finding out that the company has not paid its EMI, not paid its dues, interest, whatever. So you can make a disclosure of that. But whether the bank has made or declared the company as a willful defaulter will perhaps, to my mind, be a difficult question to answer. What we can do is that perhaps we can take an external confirmation from the bank. We also have a choice of sending letters, like for balance confirmation. It is normally the person only gets the balance confirmation statement to us, but ideally speaking we need to write to the banks as external auditors that please confirm the balance lying with them. Similarly, perhaps we can ask the banks to state for us as an external confirmation or external evidence, third party confirmation. This is one of the tools of audit which is typically said in the auditing standards, that we can get an external confirmation from the bankers and maintain it on our record that this person or this company has not been declared as a willful defaulter. But take a case where there is a consortium arrangement where there are 8-10 banks in fray, It would be a difficult task, but please don't shy away from it, because tomorrow the onus of proving that you had checked and you had reported is on us. So, friends, I feel that you need to take some good working capital checklist and sorry, not working capital, working papers checklist, and do this internal filing management. Coming to the next part, it talks of additional reporting. Additional reporting means which was not earlier, the part of it was not reported or used to be reported in the earlier 2016. But this particular point was there earlier also. You have to report if usage of short-term funds is made for long-term purposes. This specifically talks about, or rather refers to, the working capital limits, usage of working capital. This clause was also earlier there in, I think, 2006. I'm not very sure, but this clause was definitely there, that where the short-term funds are used for long-term purposes. Again, here, friends, we need to check the usage or the application part of cash credit. When you are doing your audit, you need to check it is not only at the end of the year, but it is also during the year. If at all the CC limit has been enhanced during the year, you need to particularly check whether and for what this particular funds were used. Do not forget the sanctions for ad hoc limits. There are different ad hoc limits, then temporary overdrafts, TODs, some other overdrafts which are sanctioned by the banks. Not only overdrafts, there are also unsecured loans, business loans, which are sanctioned by the banks. So, and if at all they are for the short term, then it again comes under this clause, that whether those short term funds were used for acquiring long term assets. So, in short, you have to check the entire borrowings history, or rather the entire borrowing transactions of the customer during the year. It is imperative that you build a funds flow. If at all there is a long term purpose for which it was used, you would automatically know it, because in the funds flow you would definitely question from where this additional asset was purchased, and check the source of that particular asset purchase. If at all you find that it is through cash credit or through such things that this particular asset has been purchased, then definitely it is required to be reported. Next part, details of funds borrowed by holding company for the purpose of discharging obligation of group entities. So again, it talks about application. This entire clause rather talks about the application or the use of funds that are borrowed. If at all the funds are borrowed and used for this particular use, then we have to report it. Again, if next part is also of the same style, and if at all it is there is a default in its repayment, we need to report. So this clause is perhaps the most tedious of all the clauses of Caro 2020, where not only the owners, but we also need to do a lot of work for finding out what is the exact situation. And here let me give you a clue that how do I do it. I do not rely first of all on my assistants, because then whatever you explain to them, it is I wonder what they are really doing. I'm sorry, this is a bit off the subject, but how I check this particular clause, I look at the interest expense account, where each and every interest is cross marked with the funds borrowed. So if I also know if at all there is any TOD or extraordinary overdraft or some kind of ad hoc limits, business loan, they would have to pay interest. No one pays interest from its own pocket. So they will be definitely debiting the company's account with the interest part. So it is always easier to cross check the interest expense part with the borrowings part and see for ourselves that for what exactly the funds were bought, whether they are repaid, and or how it is used. Coming to the these are some last parts of Caro 2020. Here, clause 10. We will quickly go through this because it is almost 6:45, and I would still want to share 5 important clauses. So we quickly go through these 3 changes. Clause 10 talks about money raised through own shares. So money raised through own shares, is again IPO process. Earlier there were 2-3 clauses which are now combined under section clause 10 together. Uh, it talks about IPO process and again the utilization of IPO process. A new section has been added which is section 62 in addition to the section 42 which talks about IPO. Here the section 62 talks about further issue of share capital. It is in respect of preferential and private placements also. Basically, you take it in your mind that this is about application of IPOs or not exactly IPOs, money raised through own shares by preferential placement, private placement, those also. And application and utilization of those funds. There is a project report made and for to what exactly these funds are procured and to put to what use and whether they are matching, whether the actual are matching with the projected. This is what you have to check as far as application of these funds is concerned. Coming to the next part, clause 11, it is about fraud. It is a reporting of all types of frauds, whether it is by the company or on the company. So it also includes the frauds made by officials or employees of that company. If at all any reporting is made by the auditor under 143.12, that is ADT 4, then that cognizance of that particular fraud is also to be taken while reporting, because and also whistleblower complaints. See, there are many people who are putting in communications, emails directly to the company, to the management of the company, that this is happening in your this branch or so basically all the complaints that are received by the company, we also need to check those complaints. We have to check whether the company has a system of accepting the complaints, whether there is say for example the banks have a style of having a specified email ID, that if at all there are any complaints you can make it to this email ID. If such type of system exists in the company, please have a look at it, because then this particular clause will be taken care of. What the clause says that while drafting the report, whether consideration of whistleblower complaints received by the company has been taken into account. So whatever complaints are being made to the company, you as an auditor needs to verify whether they affect the financial books or not. And if at all they are not affecting, you need to make a list of all the complaints received by the company and what was the effect and how you have considered it. Please maintain that particular record also, because next it goes on to the fraud part, and somewhere we might be taken as conniving with the company or conniving with the management. So please be extremely careful about this part and maintain all your records. Next part is specifically about Nidhi companies. All they have done for Nidhi companies reporting is that default, if at all there is any default in payments of deposits and its interest, that also needs to be reported. Internal audit, earlier also there was a clause, but in between they had, I think, changed the clause because of insertion of internal financial controls, that separate certification had taken place. But again they had removed that particular certificate for small companies and all of them, and so it completely escaped the Caro part as far as internal audit is concerned. So now in Caro 2020 they have again, I think, reinsert this particular clause as to whether company has an internal audit system commensurate with the size and the nature of its business. We as auditors remember that particular certificate where we have to certify about internal financial controls over financial statements. Here this is the same twist, उसी कहानी को अलग twist है, then पुराना twist है, that whether it is commensurate with the size and nature of its business. Here also we have to make a proper judgment, take a proper judgment of the internal audit system. If at all it is required, it doesn't matter that whether there is an external internal audit. External audit in the sense by external auditors, if at all there is any internal audit that is being taken place by some independent auditors. Though it's not that, the internal, there can be an internal audit department of the company itself, and whether that internal audit system is working properly, whether they have its own reporting process, What all is there? See, the next part also talks about the reports. Whether the reports of the internal auditors were considered by the statutory auditor, which means what? That if at all some internal auditor has said something in its report about any system, may it be stock, let it be daters, let it be recoverability of daters, if at all there is some statement, some qualifications, some adverse remarks or observations made by the internal auditors in its own report, it is imperative. The word is imperative for the statutory auditor to check and consider it while reporting in for the statutory audit. Clause 45 IA of RBI Act, there are some additions made, especially for non-banking companies or housing finance companies. If just to make you abreast of these particular changes, they are saying that these particular activities are carried out by those companies registered under Section 45 IA after taking registration, that is Certificate of Registration COR from RBI. Then there are certain things about core investment companies, CICs, and how many CICs are there in the group to which the company belongs. This is an additional disclosure clauses which are in conjunction with the earlier disclosure clause in respect of 45 IA. Now from this clause, these from clause number 17, 18, 19, 20, 21, these 5 clauses are completely new in CARO 2020. So we will be, it is I think 10 minutes into my time. So I'll be quickly going through them and telling you the highlights of this particular 5 clauses which are newly inserted into the CARO 2020. First is cash losses. Uh, all of this is the question which is exactly taken from CARO 2020. Whether the company has incurred cash losses, this is the first part. Whether it has incurred cash losses in the financial year and the immediately preceding financial year. If so, state the amount of cash losses. See, the word used here, the point to be noted is and. So if this again is something that is left to the discretion of the auditors. First set of auditors think this, that if at all these two conditions are fulfilled, then and then only we will have to report. To my mind, that is not the case. If, take for example, the company has incurred cash loss in the previous financial year, but has not incurred such cash loss in the current financial year, just because the word conjunction used is and, whether we will report or not. To my mind, yes, you will have to report. Just say that in the current year there are no cash losses, but in the immediately preceding financial year there was a cash loss. If both the years there is a cash loss, of course you have to report. Imagine a situation where in the previous financial year there was no cash loss, but in the current year there is a cash loss. Again, we will have to report in my opinion. I think the guidance note of ICAR also says about this particular situation that please report proactively. Don't take into consideration the word and. And there are also MCQs. I think, as I mentioned at the beginning of the lecture, the resources of ICAR will soon be updated, and perhaps if they have already not issued MCQs, then they will be issuing MCQs. It is not only for students, it is for us also to understand how cash losses are to be calculated. Because nowhere in CARO 2020, particularly how to calculate cash loss has been given. So it is left, so it is possible that if me as an auditor will calculate say X cash loss, it is possible that you as an auditor can perhaps calculate a Y cash loss. So it is much better to give a disclosure, a full disclosure of how the cash loss has been arrived at while reporting under this clause. Please make a complete disclosure. Please make proper and detailed notes working of how the cash loss arrived. Whatever your definition of cash loss, you can always put it in the CARO, because they have not defined it. It's better that we define it ourselves. Next, come to the auditor's resignation. This is especially, if you remember, about post last some 3-4 years. If you can check the trend, there are lot many cases where frauds have been discovered, or some or the other, forensic audits are still going on, and the auditors have resigned. Now, why the audit? They have resigned at a very, very crucial moment. In such situation, now the MCA wants us, the incoming auditor, to check the reasons for the outgoing auditor's resignation. And now this is the first part, reporting if resignation of the auditors was made during the year. You are an incoming auditor and some auditor has resigned. If at all it is proper appointment by rotation or something like that, I don't think that this clause is applicable. But if at all there is a resignation by the auditor, you need to check the reasons for the resignation. See, even the statutory auditors have also been asked to give a reason for their resignation. Second part of the question, which I would like to say that current auditor has to take into consideration the issues, objections, or concerns. So while we are asking for NOC, we always state that whether there is, apart from fees of course, whether there is any professional objection for us accepting the said assignment or not. So professional objection or otherwise, which means this type. If at all I am leaving any particular organization, I can always tell the other auditor that these are the problems, you need to look into it. I wonder how many people really do it, but this is what it means. So I would say that whenever you are asking for NOC and if at all there is any resignation, please ask the outgoing auditor to specify the reasons for why he is resigning. Uh, I, as I remember, I mean, if I remember correctly, if the resignation is being made typically for personal reasons, I am leaving, then those type of reasons would definitely be looked into by the ROC and you will be questioned. The reason is they have in their mind that if at all you have seen some problematic cases, you have seen something while auditing, some issues, you need to bring it to the fore and you cannot just resign and let go of those issues. That is where this particular clause, it has come from, has arose from. Uh, Last but two clauses, financial position. Just look at this clause and the underlining part and we will finish it off. This is on the basis of financial ratios, aging and expected dates. Here they are asking us as auditors to look into and analyze the debtors and creditors part, whether the debtors which are shown as receivables are really receivables, whether they are really the assets of the company or they are, please don't take it otherwise if I'm saying this word, whether there are fake debtors, whether they are made only out of accommodation bills or whether they are only book dates, not those kind of book dates but only existing on paper. So whether what is the expected dates for realization of assets, somewhere here we need to understand the projections, the next part, because the whole focus of this entire clause is on the going concern basis. If you look at the main audit report, again and again they are focusing and questioning us that whether this particular company is a going concern. Here this is like a final nail in the coffin that they are asking us to certify that whether the financial ratios and the aging analysis, there is nothing amiss and that you totally believe. See here, whether the auditor is of the opinion that no material uncertainty exists as on the date of audit report. So when we are saying that it is a going concern, on the other hand here we cannot say that I don't know, I cannot predict, I do not understand. That answer would not be accepted and this will be a very difficult clause. I hope that our senior members would definitely be representing somewhere to the MCA that this is something we really cannot do. To my mind, this is a very difficult clause to analyze. How do I, as an external auditor, understand whether the dates of realization of fixed financial assets and financial liabilities will be upheld by the company? What do I know as an external auditor about the management plans? If at all they say something to me, how should I believe it? And what all proofs should I take on record for myself or maybe to mitigate this particular questions arising from this particular clause? So I am asking our Central Council members and the WRC members to please take into consideration and appeal that this particular clause is something that is really beyond our scope. because at one hand we are trying to say that we cannot certify the projections, and this particular clause asks us to underline the projections of the company. So I hope that during the next 6 or 7 months, the respected CCMs would take up this particular clause, and I really expect that there would be some change brought about in this clause. As far as CSR compliance is concerned, the clause 20 is very clear and very absolutely no hidden meanings. They are only asking us if at all there is an unspent amount, whether it is transferred and to a specified designated bank account if at all there is a project, and if at all that is not the case, there is no specific funds or there is no specific project, then whether it is transferred to the fund which is specified in schedule 7. Very clearly these two clauses are there. Last clause is of consolidated financial statements, that is this clause actually is for the holding company and CFS statements. The part is earlier there was a clause about managerial remuneration. This clause has been removed because it takes care of this clause in the main report. And this is the exact requirement of the CFS, and where uh, basically to understand that group companies, if at all there are any adverse remarks or qualifications in the CARO, then whether they are included in the consolidated financial statements. This is basically a onus put on the auditors that they are compiled properly, and if some group auditors, other group auditors, they have made any observations, then this particular clause will take care, and they cannot just say that it is in the group company's CARO and I need not take it into consideration, or if at all I have forgotten, this clause reminds me that I have to take those particular clauses also into consideration while I am preparing an audit report for CFS. So these are again the credits, as I always try and give it, because for further additional reading, these are very good, links. This is my name and email ID. If at all you feel that you want to discuss something or any clause you require, please let me know. I will try my best to help you out with the reporting part, because drafting of the audit comments in the CARO is the most challenging part, and I definitely understand that there are chances of confusion or especially typical questions where how to report might be a problem. I will try my level best to help you out with it. And lastly, as I always want to end my all the discussions on some note which you can take it home. This is particularly a picture of a light show which was held in Amsterdam in 2018. The title of this sculpture is called as Absorbed by Light. So all and everything I want to say is that I understand that the technology is important, but please don't get addicted to it. So with this, I end my today's session. I hope you found it useful, and let me know if at all there are any suggestions, any comments which you feel that I should include or to improve myself. So with this, thank you very much once again.
Thank you, ma'am. There are a couple of questions
Okay.
which the participants need to ask.
Yeah.
One of them is, as I am auditor of XYZ company, which is Section 8 company, from year 2015, company did not file any ROC complaint.
Just
I
a
am Yes, sorry.
just a moment, I said.
Okay.
Okay.
As I am auditor of XYZ company, which is Section 8 company, from 2015, company did not file any ROC complaint. I am auditor of that company from 2014. So what can I do? Am I automatically disqualified from being auditor, or have to file any document to ROC for removal of auditor of company?
This question I think is related to CFSS, right?
Yes, yes, ma'am.
I think we can always ask the company to file those documents, today also, because the time limit is there up to 30th of September. We as auditors per se do not have the responsibility or onus of filing the statement, but we can ask the company to file it, or we can help them to file it.
Okay.
Is that,
Next question, ma'am.
yeah.
Can strike off private limited company in company status can go for CFSS?
No, strike off if it is already there, or even if the application also for strike off is made, then one cannot waive. Just a moment, I think I've not answered the previous question totally. I'm just reading at it. Am I automatically disqualified from being auditor or have to file any documents? No, we don't have to file any documents, but just check whether they have filled up form ADT1 as for appointment of auditors. If at all that is also not the case, ask them to file it today. See, resolution is already there in place, right? All we have to do is that the formality part with the MCA registry is not complete. So there is, I don't think that you are disqualified or anything from being an auditor, but you need to ask the company to fulfill all the formalities today. Because by, see, there are almost 54 forms and one of them is 81 also. So ask the company. So I think now the question is totally answered. No disqualification is there to my mind. Ask them to fill it up. Yeah. Next question.
Next, if property is registered on director's name and company is using the property, but no lease agreement is executed, then any reporting is required or not?
I would suggest that ask the company to make a disclosure in its notes to account, saying that for the convenience of the company or audit report, that this is the situation. Right, because it's beneficial for the company that company is not required to pay the lease rent. And if it is the proper company is using the property, so it is possible that many a times before forming the company at the time of registration, we take NOC also of that rent or whoever is the property owner. So disclosure is enough. I don't think usage is anywhere put. There is no expenditure for the company as such. But to be on a safer side, you can always make a disclosure in the notes to accounts, because this really doesn't affect our financial statement as such. Yeah.
I think, ma'am, there's no more questions. Okay. Lastly, ma'am, I want to thank you on behalf of the members of Surat branch. Thank you for taking out time from your busy schedule and sharing the knowledge on the very important and the latest topic, which is very useful to all of us.
Yes.
Lastly, thank you again, ma'am. Thanks a lot.
Thank you, Ashwin. Really, it was nice of you to have remained. I hope you also found it useful. And to all the members, I would only say this, that I'm definitely going to share the PPT of all my presentations and also some additional reading material for your use. So please go through it. I'll also try and share the guidance note if at all it is there on Caro, which has been recently issued. And if I find MCQs also there, I will also share it with all of you for your ready reference. Thank you so much for your patient listening. I'm really honored, Surat branch, for giving me a chance to speak.
Oh, thank you, ma'am. Have a good day.